Hey everybody, Andy Moss here with tradingadventures.com and Alphatrends.net, and this is your Saturday look at the weekly charts where we take a step back and look at the bigger picture of the markets, what the price action has been, and what messages the market may be sending. And before we jump into the charts real quick, just a note about the recent sale. If you've already seen the articles and announcements of the last couple of days, then you already know what's going on. And in case you missed it, the window for the Alpha Trends invitation is open again. The response has been very strong already. A lot of you have reached out, asked questions, and some have already joined, and I appreciate that. And if you've been following along the work here on tradingadventures.com and you're ready to go into a deeper level, not just the market commentary, but the structured trade ideas, risk management, and the real-time process, this is exactly what that is built for. So no pressure, but if you've been thinking about it, now's a good time. You can see these articles here. All the details are there. You have the opportunity to take a 2-week trial and see if you like it with no long-term commitment. So take a look at that and see what you think. Now into the charts. A bit of a hairy week this week with NVIDIA earnings, but here looking at the S&P 500, the SPX, we can see that a bit of a rebound is keeping it very close to a flat 10-week moving average. The RSI continues to stay in the bullish upper half of the range. Volume is pretty normal, and no big warning signals here on the index overall. Here's the SPY version, obviously similar action, and I pull this one up to show that it is still struggling here at this Fibonacci extension. RSI is lower, just like SPX, of course, but it is testing these levels again with an inability to move higher. And so, a little bit of a cautionary event there, but we still have these recent lows from the last several weeks that are continuing to hold and act as support so far. The Q's very much the same. We have a extension level here, but the price is cutting a little deeper below this now declining 10-week moving average. RSI is testing the 50% level here, and we'll see if that can hold. If it starts poking below here and staying, that of course will be another piece of the puzzle pointing to the more bearish side of the camp. But right now, still holding these recent lows of past weeks and the anchor from the big breakout back in June. So it is down in the lower half of the Bollinger Bands, which are flat and tightening. And we know that that contraction almost always gives way to expansion in one direction or another. DIA, the Dow 30, is losing its grip on recent leadership. We now have what looks like a failed breakout here. This moved 3 weeks ago. And once again, right into this extension level, which is the measurement is from the April 7th low and the December 24 high. And that Fibonacci extension is relevant across several of the charts we've considered so far. A little bit of congestion in this area. It closes below a rising 10-week, testing this anchor from the November 17th weekly low, which was a handoff from this breakout anchor. And RSI still holding up here just fine. And once again, volume is pretty normal. Small caps also continuing to consolidate in what still looks like a bullish consolidation pattern. It's above a rising 10-week moving average. It is above this anchor from the lows late last year, and RSI is still in a very healthy spot. So no big warning signs there on the small caps, but the strong leadership that's been demonstrated by the Dow 30 and the small caps is maybe starting to take a little bit of a rest there. Bitcoin still looks terrible. This is continuation of a very solid, pronounced down rest or recovery there for Bitcoin so far. And the dollar is just kind of hanging around here in this low level consolidation. It is bearish action below all of the relevant moving averages. and not making a whole lot of progress other than, we could say it's holding above this $96 area in here, but not a lot of positive development there for the dollar. Moving overseas, looking at the all cap world index X the US. So this is the rest of the world, still very strong. This is where the leadership is still holding up very well. RSI continuing very high up here, 79, over 79 here on the weekly reading, and maybe starting to flatten out a little bit, but in a very strong area. And notice how it's been this little thin line here is a 4-week moving average, and price continues to climb that steadily. So lots of demand for foreign stocks from a U.S. perspective, but China is a weak point. It tried to make progress and hold this trend line, which extends back a long way. And after, again, what looks like a little bit of a failed breakout here or a false move higher, it is continuing to weaken and really pronounced selling this week, taking it below the anchored volume weighted average price from this dip back in April. So RSI now squarely below the 50% level. Volume was average, and that's pretty intense selling pressure there on the Chinese stocks. Now moving into the bond indices, the AGG, the aggregate bond index, is strong buyers again this week as bonds continue to rally back into the area of this high from October of 2025 and really showing no signs of letting up yet. This is a strong weekly close near the top of the range. RSI very healthy up here in the bullish upper half, and volume took a nice tick up from last week's short week. TLT, the treasury bonds, same similar action here, up and out of this kind of congestion area here, not yet testing these highs. But remember, just a few weeks ago, bonds really looked pretty bad and susceptible to further downside, and they made a very quick reversal. This chart has gotten very messy in here as we have analyzed and followed the price for the last several weeks. We'll clean that up in the coming weeks, but the price action tells the story with RSI confirming back up in the bullish upper half on average volume there. So seeing strong demand for bonds, maybe a move to safety, maybe more rotation into the friendlier asset classes. High yield continues to trade like stocks as it's supposed to do. We don't see a whole lot of negative action here, although it is below a still rising 10-week moving average. The difference that is notable is the strong demand for investment grade fixed income assets with a weakening demand for the higher risk, high yield sector of the bond market. So RSI, which has held the 50% line very well for recent months, is back down and testing again, and that's a discrepancy there that we want to keep an eye on. The strength in the investment grade versus the developing weakness in the high yield could be a tell going forward. Commodities as a group, GSG is the index ETF we're considering here. Still very strong, making new recent highs on strong demand with RSI up right near 70. And commodities are doing all the right thing as far as the context of bullish price action, digging under the surface of that a little bit. Even oil is getting better. It's back, not back, but further above this area of potential supply or actual supply back here for a couple of weeks. And the 10 weeks coming up very strongly. It is nearing a now rising 40-week moving average. RSI is doing all the right things, so the demand for oil is holding up. And then we'll move into gold. Gold adding more to the gains. We had a little bit of squirrely action back here for a couple of weeks, and it's settled in right back into its uptrend very well. RSI barely able to get below 70 on all of these recent breaks. The demand for gold continues to be very, very strong, and we see that in the price action with that asset as we do with silver. Once again, a little bit of erratic movement here, but settling back into this uptrend. Not as smooth as gold, a little deeper here on the tests with RSI, but it's right back up near 70. And this is really strong 2-week action there on silver, albeit on lighter volume relative to what we saw on this big volume bar back in late January. Now considering the indices in a little different format, here is the equal weight S&P 500. And so once again, the cap weight is market cap weighted. The bigger companies have a bigger vote in the index. The equal weight, every stock gets one vote. And so what this normally tells us, or what we're analyzing here really, is the ability and the participation of the smaller companies in the index to drive the overall group higher. And that's exactly what we're seeing here. Ever since this dip back in November, demand has been very strong, and it's climbing a strongly rising 4-week moving average, pushing the upper Bollinger Band higher. RSI is now in technically an overbought condition, but that's very bullish action there as volume continues to hold right around average. The equal weighted NASDAQ 100, same kind of move, or same kind of view. We're looking at the ability for the smaller names in the group to move the index, and don't see the same bullish action here. It's a little bit of a consolidation and maybe a relief bounce here so far, but it's right back into the sharply declining 4-week moving average. We've got the 10-week very close to crossing below the 40-week up here, and the RSI is still well in the lower half of that. So equal weight S&P, very strong. Equal weight NASDAQ, a little relief, but much weaker there. And then we'll just go ahead and look at these. Here's the Russell 1000 growth. You're just kind of taking a break here around this rising 40-week moving average. We see this, potentially topping action here, but we've found decent demand to hold prices up here for the last 4 weeks. So not out of the woods yet. It's still a bearish consolidation as prices below all the moving averages, and the Bollinger Bands maybe just starting to open up to the downside there a little bit on the IWF. Looking at IWD, the value counterpart to the Russell 1000, very strong, climbing the 4-week moving average. Looks very similar to the RSP index that we just considered a few minutes ago. So growth a little weaker, value a little stronger. So now we'll look at XLY, the consumer discretionary sector. This looks very similar to that equal weight NASDAQ. And I'm just pointing out the similarities there. I don't know the overlap in the indices, but the price action has been similar. We've got a bearish consolidation pattern here on the short and intermediate term, but it's still holding this rising 200-day, 40-week moving average there. RSI holding the middle point. So no major breakdown there, but it is, if you consider this action, it is potentially topping action there on the consumer discretionary sector, and weighing that against the consumer staples. Very strong action in the staples with an outside bar here, or a bullish engulfing candle, call it what you will. This is very strong price action off this recent low back towards the beginning of the year. RSI is very strong, the volume is strong, and the Bollinger Bands are very wide. The price is pushing that upper band higher as we go. So now, as we do, we'll consider them as they look relative to one another. Here is IWF versus the IWD. Price moving lower here tells us that the strength is with IWD. And I mentioned in the last go around, these extreme readings on RSI have provided a bit of a signal. And when it gets overdone, often it does revert to the mean, but not always on the first test. In this recent action here, we saw a test, a little bit of a break or a rest, and then price came back up and RSI tested again. So what I pointed out to look for was, just because this test was here didn't necessarily mean we were out of the woods yet and could look for reversal. It wouldn't surprise me a bit to see a bit of a reversion back up into this area, maybe testing this declining moving average here before we see potentially lower action on this relative strength chart. So far, it's holding in here pretty well, but that's still a situation that I think we should look for in coming weeks. XLY versus XLP. we see this in the individual charts. You don't have to put these together against each other to notice that relationship, but for me, it's something that I do find helpful, and we're continuing to see favoritism towards these staples and away from the discretionary items, as this chart looks like it may want to even break lower. Now, this is an inside candle here, so it's the high and low of the week are within last week's high and low, but it's not a huge signal. Just consolidation there below all the moving averages, and RSI down in the mid 30s there. So that is a bearish consolidation pattern on the XLY versus XLP relative strength chart. High beta versus low volatility. We look at this as an indication of risk appetite. If the high beta indices are or group of stocks is stronger than the low volatility, then that tells you where people are more comfortable putting their money. And right now, this is still moving in the direction of low volatility. So when we consider all these things as a whole, what it's really telling us is that there's a shift toward a more risk-off attitude or positioning relative to the higher risk areas of the market. So that adds to the defensive posturing there for all of those relative strength indices and comparisons. Looking at the SOXX, the semiconductor index ETF, it's holding up very well, still climbing a rising 4-week moving average. There's a lot of separation here between a 10-week and a 40-week. Very strong uptrend in computer chips and semiconductors there. And here is the software sector. Really nasty downtrend here, but let's just add something in here for reference. We can look at the recent lows dating all the way back to January 2024. We're finding a bit of a bounce here. This came down, tested this area, and got a little bit of a relief rally. Now, the moving averages are still coming down very steeply. RSI is in the gutter up here at about 27.5, and we do have a DeMark 9 buy setup, which, if we revisit that, that's an indication of potential for reversal. It's not a forecast. It doesn't mean any price action has to go up next week, but it is something that fits as a piece of the puzzle. We had a lot of earnings this week. We've got a huge volume candle here on the software. Everyone is looking at that thinking, how much further down can it go? Maybe it's time to buy the dip. Let's catch the falling knife, whatever the case may be. It's a very bearish looking chart, but there is context here to support maybe a bounce case. What we want to see next week, if this bounce is to be confirmed, we need to see price action that is above this week's closing high, or even above the absolute high would be even better. That was right in line with this declining 4-week moving average. And so we just have to wait and see, does the price action confirm the bounce story, or do we see more weakness next week? The Mag 7 as a whole, this doesn't tell us really anything much different than a couple of charts we looked above with the equal weight NASDAQ or the growth sector or that kind of thing. We've got potentially topping action here as it tests this anchored volume weighted average price from the April 25 lows, and we'll see, can it gather itself and move back higher, or does this bearish consolidation pattern lead to further downside? And just a very quick look at those names individually. Apple got off to a good start, but gave up much of its gains by the end of the week, as indicated by this long upper shadow there on that candle. Amazon not really going anywhere, trying to test this declining 4-week moving average. Google, which was the undisputed leader of the Mag 7 names for quite a long time, is now struggling. Held this anchored VWAP from the October lows last week and got a little bit of further upside, but was capped by the slightly declining 10-week moving average. Meta, bearish consolidation pattern here below all the moving averages, which are flattening or declining. Microsoft, which looks very similar to the software chart, just really can't find any sustained buyers here. And this anchor, which appears to me to be very relevant and potentially important. That's off the January of 2023 low, and it wasn't very clean, but it tested it here and held back in April of 25. This not very clean, but it's testing it now. Time will tell if we get a bounce or does price decline further from there. NVIDIA, as we know, big earnings week, started strong, had a bit of a rise into the report, looked good, I believe, the morning of the report before market hours, and then just kind of fell pretty precipitously there down to this rising 40-week moving average. RSI is below 50. It's not broken yet. It could bounce next week, but not exactly the action we want to see from NVIDIA there, as it just can't get moving. Ever since this kind of capped off this rise back in July of 2025, price action has basically gone nowhere, as all of the relevant indicators here are pretty much flat, and price stays contained in a very tight range. Tesla, no major positive development there, other than it's another test of a slightly rising 40-week moving average and a DeMark buy signal here. Again, not a prediction, not a forecast, just another piece of the puzzle and something to watch for. Can we get some confirmation with some higher price action next week that maybe could give Tesla a little bit of a rise? If that happens, I wouldn't look for a move much beyond this 10 and 20-week moving averages here. The 10-week is coming down. The 20-week, which happens to be the center of the Bollinger Bands, is flat to declining slightly. That's right around the $435 range. So that would be an area to monitor if Tesla can gather itself and get some positive movement next week. So now let's move over and take a look at some breadth and participation measures. Here is the S&P 500 index price action up here with the percentage of stocks above a 50 and 200-day moving average. The percentage above a 50-day is strong, just under 63%, but notice it has been moderating and coming down a bit for the last several weeks. The percentage above a 200-day moving average is just pretty flat and holding in there well. There's no big red flags there. We wouldn't be terribly concerned until it got below the 50% level. But as price continues to chop along and consolidate up here, the percentage above these relevant moving averages is doing the same, which is no surprise. And for another view, we'll go to stockcharts.com and pull up the trusty point and figure charts. And what we're looking at here is the S&P 500 bullish percent index. This tells us how many stocks or what percentage of stocks in that index are on a point and figure buy signal on an individual basis. And we've got, maybe a bit of a bull flag pattern here. The technical status is bull confirmed. We had a nice rise at the beginning of the year. It moderated a bit, and we're sitting around 62.5% on this indicator right now, which is commensurate with the percentage above the 50 and 200-day moving average. So again, no caution here, no big red flags, just a moderation right now. We'll see how that develops, and then we'll go to now look at the same thing on the NASDAQ 100, holding up pretty well. So even though the index is not moving a whole lot, and the equal weight looks pretty weak, the percentage of stocks inside that index on a point and figure buy signal are still above the halfway point, right here at 60. We've had this strong rise in recent weeks, and it's in a bull confirmed status. So it just tells us that below the surface, individual stocks are still holding up fairly well by that measure. And the last one here we will look at is the New York Stock Exchange bullish percent index. And this one is technically listed as a bull correction. We see a nice move here, and it is in a column of O's and declining. So that's why the bull correction status there on the NYSE bullish percent. But we've still got pretty decent participation beneath the surface across the board there. So putting it all together and asking the question, now what? What should we look for in coming weeks? What is the price action telling us? And to me, it's still saying this is a market that can't decide which way it wants to go. If we consider last week's scenario, a lot of this is exactly the same. Bonds still moving further to the upside. Commodities breakout is still intact. Gold is still holding well. Bitcoin still looks terrible. It's in a bearish consolidation within a strong downtrend. Lots of momentum lower on that. The leadership, semiconductors are still strong. Software is still weak, although maybe we have an indication of potential rise in software. That's a big maybe. Maybe we made it through NVIDIA earnings, and it wasn't much of a catalyst. It didn't move things deeply in one direction or the other. And as far as breadth, the picture remains the same there as well. We've got roughly 2/3 of S&P stocks above a 50 and 200-day moving average, and risk appetite is still shifting towards safety. There's high-quality bonds, more defensive sectors of the stock market, like the consumer staples and that kind of thing. And so the message really here is pretty consistent. No big shift in one direction or another. We just have to continue to be patient, wait for the price action to lead and give us the signals of potentially a resumption of a more risk-on appetite, or do we need to get more defensive as price action deteriorates? We'll see how that happens next week, what goes up, and what signals or stories evolve there. And what I'm looking for here is our calendar. We'll go in here to the Trading View calendar for next week and see what is on the schedule. We've got some Fed speakers, we've got some factory orders, we've got ADP employment data, and various other pieces of economic data scattered about there. But probably the big one will be PPI inflation data on Friday. So that's something we want to be aware of. Just know it's coming. Earnings, we're going to have a lot of things announced still next week, but just looking at some of the bigger companies, we've got some financials coming. We've got Intuit, we've got Dell, and lots of other names reporting next week as we consider the calendar there. So that's what we see in the market. So once again, no major shifts, no major drifts, no huge events as far as price action or indicator development or relative strength relationships. Things that were in motion continue to persist, and we just have to remain patient and watch for those next big setups. So as always, thank you for spending some time with me here on Saturday. And if you've been watching these weekly charts for a while and you want more than just the broad view, if you want to get into the execution side of things, the actual tactics, and have direct access to the tools and guidance to refine your process the right way, all the details are here on the page. Click through to this note or this note and have a look at the landing page over here. Consider the 2-week trial if you think that's appropriate for you, and just come into Alphatrends and see what it's all about. This is where the rubber meets the road. This is where we put all of these tools into action, daily game plans, structured trade ideas, and all of the parts you need to refine your process in the right way. So if you have a look, great. Either way, no pressure. I'll see you next week. Let's keep it objective. Let's watch the price action and see what develops and be ready no matter which way things develop.